Well, good afternoon, everyone. Welcome back to the channel. So in this video, we're going to go over some advanced option strategies, and we'll even cover some of the basic ones too, that are known to generate consistent income. So this has been a request I've gotten over the last couple of days. And we've got, in my Discord, we've got a sub channel called The Wheel Strategy, where we've had a lot of really good trades shared. And I figured I'd just break them all down. And I even have the coach's play sheet here when it comes to options. So we'll go over the basic ones as well. So this thread or this sub channel, since I created it, has really blown up, I would say. And hopefully no one in here would mind if I share their trades. The first one that we had shared is it was a, let's see, we had a trade on AMD, and let me do this here first. Let me try to kind of explain some of these as best as I understand, because believe it or not, I mean, I know options. I've traded options successfully, but I'm by no means an expert. So the wheel strategy basically involves cash secured puts. So if you Google it, which anybody can do, the options wheel strategy, also known as the triple income strategy, is a method where a trader continuously sells cash secured puts until assignment, at which point they start selling covered calls against the assigned shares. So let's go over here a basic little visual, because I know a lot of us are visual learners. So let's do this here. There's a website called Steady Options where the wheel strategy is explained. And so we went over the first paragraph here. So once the covered calls are assigned, they start the process over again by selling more cash secured puts, hence the term wheel strategy. So let me share this visual here with you all so that you have something to work off of when we actually go over the trades, so that they will make sense, or more sense than they would without going over, this in advance. And of course, hopefully once you learn this, not only will it make you sense, but hopefully a lot of dollars as well. Okay, so here is a chart here, a visual of the wheel strategy. Okay, so you start out with selling puts, you collect premium. If the puts are assigned, you're going to sell calls, collect premium. If that gets assigned, the stocks get called away, and then you have a profit. And then you just repeat it over and over again. So that is like the 10,000 foot view of the wheel strategy. So now what I'm going to do is go over all the brilliant trades that have been shared in the Discord. So here we go. The first one we're going to look at, I'm going to start a screen share here. And we're going to have the first one we have is a sold put on Amazon with a February 2nd $150 strike price. So this was January 24th. The put looks like one contract that generated $205 in premium. And then here's another sold put for $299.32. And the thing about the wheel strategy, you keep repeating it over and over again, hence the name. So this is a Tesla. Now, here's a great thing. So we talk about Tesla, the declining NAV for funds, like Tesla and most of the yield max funds. So doing trades like this can offset some of your losses. It works as a great hedge. So anyway, so there is this one, and I highly recommend that you all join my Discord because you can see stuff like this shared. Here's a tremendous option win by Blake Downer on MSOS. He's up well over this by now. But yeah, I mean, almost 100% on a short-term trade is phenomenal. And then let's see here. Oh, here's a good concept called margin of safety. You know, when you want to buy, if you can find it under the intrinsic value of a company, you're in a great position. Okay, and then let's see. We got some more trades here. So this is AMD February 2nd, $170 put. So I believe this was premium collected on 4 different trades. We've got Google put, we've got a Tesla put, and then Shopify. So think about that with 4 trades here. That's like a day's income on just those 4 trades there. Now this one, so you can see these are being repeated on the same companies. So Tesla, February 9th, we're looking at now. So this one would have just expired. This was $230 in premium. And then SOXL, this was almost $214 in premium. So you add those 2 up, there's like a full-time daily income right there, if this was replicable every day. Now, obviously, you know, we're going to start doing more options videos because there is absolutely interest on here for options, not just dividends. There's definitely growing interest in options. So, you know, I'll share some of my successes on here, and I'm going to go over, there is a program that I follow that has been very successful. It was very successful in 2021. It had a very, very down year in 2022, but of course, who didn't? Last year, it made quite the rebound. And then this year, it seems to be doing pretty good as well. Okay, so there is this one. Here's another one. Yeah, so this is really weekly cash flow. Here is Medical Properties. Sold the put. And then here's some other trades. Here's a nice set of 5 trades here. So this one is, I'm not sure what the symbol was here, but this is obviously Google. This is the small cap, the IWM, Shopify, Tesla. So you see, there's income to be made here selling puts on Tesla to offset any losses in Tesla. Here's another great trade here. Medical Properties, MPW, $250 in premium. Really good trades happening here. This one, sell to open, a put on Medical Properties again. I don't see the number of contracts there, but let's see. Here is Tesla, Google, SOXL, SOXL again, and then TMF. What is TMF? I got to look that one up. But anyway, if the wheel strategy seems too advanced, we'll keep going over it, but I'll go over the basics on this sheet too. Let me just look up TMF real quick, just for my own knowledge here. And then we'll get back to some more trades here. So TMF. Oh, it's a Direction Daily, 20+ year treasury. Interesting. So this person is trading options on, this is something I talk about, trading options on these levered ETFs. You can make a lot of money. I typically do it on the call side. I'm a big fan of just making money on the call side because the worst that can happen is that, you know, your call just expires worthless and you lose that money. When you start selling options, you can end up being worried about assignment and you know, stuff like that, or losing the stock. But the thing is, and I think Blake actually said this best, if you're trading or if you're selling covered calls on a stock that you're you pick the strike price you want. So you should be, and not everyone does this, including me, but you should be picking a strike price that you're comfortable parting ways with that stock if it comes into the money. So anyway, here is Shopify again, MPW, SoFi. There's SoFi. So yeah, we can definitely trade options on that one. Here's a really nice trade here, $527. Sell to open 33 contracts of MPW. Puts limit at 16 cents daily. And then things that come into play also. So you have delta and you have theta. So delta, the higher the delta, the closer to being in the money the option is. But it's also the more, for every dollar that the underlying asset increases, the delta, it's going to increase like by that much more. And then theta is what they call time decay. So every day, all the way to expiration, there's a little bit of theta decay, and it's like the cost to hold it if you look at it that way. Within the last 30 days, the theta decay is exponential. So you're going to go like from here to here fast. So typically within the last 30 days, you want to be making some moves. And look at this one. Here's some gains on these here. 44%, 29%, 34%, and then 55%. Those are phenomenal gains. So obviously, as you guys can see, there's a lot of money to be made in these. This one is, this is ABR. Let's see, that's the chart there. And then, okay, that was the last one that was shared there. So let's go back to explain the wheel strategy again, just for anybody that's completely new to this. Oh, look who we have on. Welcome. I think we have our number one, speaking of ladies, I'm just kidding. He says I'm early. Oh, wow, we have a Skrobaka sighting. Where have you been? No one's heard from you in like 6 months. Hope you've been doing okay. Can backtest till your eyes bleed, but selling calls makes little money compared to long stock selling puts. What about just buying calls and riding the stock up? I do like backtesting. It's always fun to look retrospectively at, the missed trades. Like one of my favorite ones that I've covered as Amazon call options. If they had been bought in like March of 2020 at the right time, by September of 2020, when that stock fully recovered, you could have had, if you bought enough contracts, you could have had like a $500,000 blockbuster gain in the options. When you start to learn this stuff, it's amazing that this stuff is legal. You start to really appreciate how financial markets can create your net worth once you really know how to play them. Oh, okay. Third baby born in September, working full time now, going back to college, pretty busy. Okay. Yeah, a lot of people have been asking about you. It seemed like you kind of fell off the map there, but we're glad you're doing well. Glad to see you back. We're kind of getting the team back together, I feel like, which we need to do. We need to, keep this thing growing. This is this dividend niche is a very, very fast growing, very competitive niche. But anyway, let's see. Texas long selling puts to pay for long calls out of the money. Oh, that's a good one. Let me go over the basics here really quick. So a long call, okay, that's one of my favorite strategies, just basics. Long call, a way to profit from growth in the underlying stock's price without the risk and upfront capital outlay of outright stock ownership. So without the risk and upfront capital outlay. So you can basically make money on the stocks, make a lot more based on running up. You have control over far more shares than you would be able to buy just with buying the stock. And when the price runs up, the option runs up way faster than the stock does. So you have leverage for a lot cheaper. So someone might ask, well, then why invest in stocks then? Why not just trade options? Well, you could. I mean, it's a free country and free market, obviously, but it's very risky. That's the thing. It's very risky. Some, depending on who you're talking to, some people don't like the concept of risk, but risk is very, it's a very key concept in investing. I mean, you don't want to lose everything. You want to manage your risk where you can. And this is a great point here, according to Hoffman here. Buying options, you lose 80% of the time. I don't know about that, but you definitely, the more risky you are, the more you're going to lose. And the thing is, a lot of times when you see other YouTubers and stuff, when they're showing their gains, they're only showing like their best trades. Somebody that trades options consistently, and I can speak from experience, there are a lot of losses lumped in with the gains as well. But the gains, when they happen, are awesome. You want to go like have a beer or have six after you've made a great gain. Anyway, so yeah, exactly. So a long call is one of my favorite. Just a simple, plain old long call is one of my favorite strategies, because you can make a lot of money when the stock runs up. And then you have a naked short put is a bullish option strategy executed to earn a consistent profit by ongoing collection of premiums. So that's similar to selling calls as well, which that's basically the next strategy I'm going to cover here. Covered call. So a covered call, so you're going to buy or own the stock and write call options in the equivalent amount to earn premium income without taking on additional risk. Now, here's a advanced trick. It's called a poor man's covered call. So if you don't have the capital to buy the stock, which most investors probably don't, you can actually buy leap options on the stock, and your broker will recognize those options as shares of the stock if they're far enough out. And then you can sell call options to collect premium. It's an advanced but very easy strategy to do, and it requires way less capital up front. Let's see here. I think the sweet spot for a long call is 20 delta out of the money, 15 days to expiration. Take 100% of the debit paid as profit. That's like what, a debit spread? The market does one of five things: flat, down a little, down a lot, up a little, up a lot. You only win at the one extreme. Yeah, but if you're there's bearish strategies too. If it's down, I mean, you can technically. I feel like there's options strategies for everything the market does. If the market's going to be flat, make money on covered calls. You look at a stock like Apple that relatively stays within the same range. Keep letting those things expire worthless. You've collected the premium. You have nothing to worry about. It just expires worthless. You keep the money. In a market that's very, very far up, your call options, right? The stock's going up, call options, bang out some profits. Up a little, you have your spread trades, right? Like your call spreads. Down a little or down a lot, you start getting into your puts. Like if you buy puts, say Tesla, okay, if you bought like, would a leap also be considered like a put as well? So if you had bought puts on Tesla in 2021, when it fell from 391 all the way to where it is now, you would have made a lot of money on those puts, right? So I feel like there's strategies for every facet of the market. Buying and selling, of course. I mentioned buying because I've been burned by selling, and I almost over leveraged myself on some Mercado Libre trades one time, but I've got to get over that. Maybe I need to go talk to my therapist or something. That's another thing. Can a therapist help you with financial mistakes? Because we only hear about like emotional stuff when it comes to therapy, but they should have it for like they should have like financial therapy too. I guess that would just be having a beer. Huffman, I think trying to make money in all market environments with no risk anywhere is the fantasy holy grail. Chase. Oh, I see. I needed to read what you said more carefully. You said you lose with options purchases 80% of the time. Yeah, you're right. So with buying and selling, yeah, so you're saying with overall you win 80% of the time. I would agree with that. I got to read what you say more carefully. I think it's good. It's about making good money in certain market environments, not getting hurt too bad in others. It's all reward to risk ratio. Yeah, okay, I see what you're saying. If you dedicated 3% of your portfolio a week to 15 days to expiration, 20 delta long calls, 100% profit target, 10 years, SPY, you would make 1,000% gain on your portfolio. So how about this, Mr. Olinger? Why don't you come into the Discord and post your trades with the rest of us in the sub thread that I showed about the wheel strategy. That would be awesome. And I'll have to go back. I've actually I haven't traded an option since last year, but I'm going to get back in the game for sure. I missed a lot of upside because of my situation that I had in 2022 with Mercado Libre. So like I said, I got to get over that one because there was a lot of upside missed. I did some on the TQQQ last year until I finally had one that just burned me. But you got to get over those losses because getting over the losses faster will help you to get back to more gains quicker, if that makes sense. So as far as the next strategy on the coach's playbook here, which of course this was just something that was sent to me by one of these scammy services that advertise on YouTube. It's one of these things, they send you something free and then they bait you in and they try to waylay you with some $4,000 course or product. But anyway, this comes in handy because it explains things pretty well that I already know. And it gives me something to hold in my hand like a play sheet. So let's you gotta love it when people call you when you're live streaming. Let's see here. Let me get back on focus here. Okay, so yeah, I'm sorry about that. I had a stupid phone call come in while I was live streaming. You gotta love it when that happens. Um, I've got a question for you all. Can somebody help me with? I want to start live streaming in the Discord, and I've done it a couple of times. But when people are talking on the voice chat, when I'm streaming in StreamYard, it seems that the stream doesn't pick up what they're saying. It only picks up what I'm saying. So there's one of two things I could do. I could either state their question, and then they just don't get heard. But then that kind of defeats the purpose of voice chat. They could just do that like in the chat. Or if somebody can help me figure that out, I'd like to have the interactive chat and live stream it. So I need somebody's help. I need a volunteer from the audience to help the coach out. Okay, let's see. Sorry, people. My freaking gate keeps calling me here. Um, okay, this is probably going to keep happening until I answer it. But anyway, let's see. So I can hear the voice on my end, but like if you remember Hoffman, when we were talking on the voice chat, um, when we were talking, it only picked me up. It didn't pick up what you were saying. No, it's not DoorDash. I don't use that shit. So as you know, as well as anyone, I am cheap. So I would rather either walk or drive somewhere to pick up food. I'm not going to pay these fees for something like DoorDash. But I did consider when I first bought my house and was struggling a little bit, I did consider doing DoorDash on the side. Grubhub. No, it's none of that. It's none of that. Um, okay, so let me try to breeze through the rest of these here because I have a feeling I'm about to get a knock on the door. Let's see here. So bull call spread. A bull call spread is an option strategy for taking a position with limited risk on a stock with moderate upside. My gate keeps calling me. I believe it's my roommate. That is. Let me see. Am I back? Can everyone hear me? That is annoying as heck. It's funny. I was thinking about a service like a DoorDash, but with what you're saying, and I guess they would come up with something like that. But who knows? Who knows what they would call it? Anyway, all right. The coach is getting tested here. Um, a bull call spread. Yeah, like I said, option strategy for taking a position with limited risk on a stock with moderate upside. A bull put spread is an option trading strategy employed when expecting that the price of the underlying asset will go up moderately in the near term. A call back spread I've actually never heard of this one, even though it's on the sheet. Option trading strategy employed when expecting the price of the underlying asset will experience significant upside movement in the near term. Okay, and then for advanced strategies, which we're not going to go over all these in one video, but we'll save it for, there will be a part 2 and a part 3 and all the way, we'll make this a regular series. Anyway, so we covered a lot here. We'll keep covering more. I'll eventually show some of my best trades. And thank you guys for tuning in. Especially happy to see Scribaka back with us. Welcome back. We're putting the gang back together, I feel like. So like, comment, and subscribe if you haven't already, and we will see you all very soon. Take care.